Well, good morning, everybody. This is Billy Trout, Manager of Taxpayer Education for the Tennessee Department of Revenue. And on behalf of our Commissioner, David Geragano, and all of our folks in Taxpayer Services, we're very glad to have you with us today for our presentation on liquor taxes, specifically taxes on wineries and distilleries and breweries. So we'll be going through a lot of information with you today. And of course, we have the information currently out on our website in PDF form for you to go ahead and download now. And I believe Katie's got a QR code there for your convenience on the screen as well. So I want to go ahead and introduce Katie Julian, our hostess for the day. We'll be walking through the material, and also our guest today from our audit division is Amanda Luke. So Amanda and Katie, thank you very much for being here. We also have our Assistant Director, Dan Vinson, online to help us with some questions and some other logistics. So with that, I will turn this over to Katie, and we'll be talking to you later on in the presentation. Katie, take it away.
Thanks, Billy. Excited to have you, Amanda, with us this month. Just a few things to go over with you all before we get started here. I think Billy put in the chat too, we will be recording this and posting it on our website in the webinar video library either later today or tomorrow. If you need CPE credit, hang out at the end. There'll be a survey when you exit the webinar, and it'll ask you if you need CPE credit. Just answer yes to that. If we don't get around to all your questions, we'll share this information again later, but revenue.support@tn.gov is a way to reach out to us. And again, you can get a PDF of this presentation either by scanning the QR code here, or I put it in the chat a little while ago. If you've just joined, you may not be able to see the older chat stuff. We will be opening up chat for you to ask questions to this panel when we get to the second half of the webinar. So just hold your questions for now, and then we'll open up the chat in about 20-30 minutes or so. I think that's it on all that information. Again, this webinar, part of our series actually on alcohol taxes. Today we're focusing on taxes for wineries, breweries, and distilleries. It's the final of a three-part series we've done on alcohol taxes. We had an alcohol taxes overview back in fall of 2024. So much information there that we weren't able to get to everything. So we've broken it down and had a couple of breakout webinars that are related to alcohol taxes. A couple months ago, early 2025, we did liquor by the drink. And there are so many special circumstances for wineries, breweries, and distilleries in this state that there was enough to dedicate an entire webinar to. So that is why we're having this today. We're going to briefly go over some of the stuff that we've talked about in the other two, in the alcohol taxes webinar and the LBD, liquor by the drink webinar, just briefly, because we're not going to dive into details on those subjects today. We're just talking about the exceptions. So again, overview of today's webinar. Our laws here in Tennessee regarding alcohol do allow for exceptions and some special circumstances for these types of businesses. We're going to share with you today some resources, again, go over a brief overview of alcohol taxes, and then we're going to dive into the exceptions to the three-tier system and special circumstances for these wineries, distilleries, and breweries. And like I said, about halfway through the hour, we will open up the chat for you guys to ask questions of our subject matter expert in this panel, and have also discussed some other topics and FAQs and such. This is a link to resources. If you have the PDF, of course, you can't click on these links on your WebEx screen, but if you've downloaded the PDF, these are hyperlinks over to several resources that we want to share with you regarding this topic. We do have a tax information page dedicated to all the various alcoholic beverage taxes and beer taxes. There's an info page about specifically liquor by the drink. As I mentioned, we've got an alcohol taxes webinar, a liquor by the drink webinar. There is a whole tax manual dedicated to alcohol taxes, every detail you could ever want to know about them. And then, of course, a link to the ABC's website. The ABC, Department of Revenue, and local governments all regulate this highly regulated alcohol and beer in the state. So link over there. Um, these are the different registrations and taxes specific to alcohol. It's a lot here. What is that? 10 or so different registrations. The alcohol taxes webinar is going to break down each of those, and I'm going to spend a minute right now actually taking you over to where you can find a copy of that webinar, and we're just going to briefly scroll through it. So let me go over to the web. I'm on our website now, tn.gov/revenue, and we're going to scroll down just a little bit and click on Taxpayer Education and Outreach, the bottom right tile here. This, see, tax webinars. Yep. This is where you would have gone to register for today's webinar, and also where you can go to click this button here to download this PDF. We're going to scroll all the way to the bottom to our webinar video library. If you've never been there, please visit that. We've got, let's see, 67 webinars out here now and growing by one a month at this point. So I'm going to just type in the beginning of, okay. We've got two different, like I mentioned, two different webinars dedicated to alcohol taxes. We've got the alcohol taxes overview webinar and a liquor by the drink webinar. If you click on the link in the first column here, that takes you over to the video of the webinar. But here in this column under presentation guide, that's where you can view the PDF. That's what we're going to click on right now for alcohol taxes. And just want to show you, if you missed this one, take some time and watch the video, or at least scroll through these through this PDF here. The stuff we covered, the different regulation areas of regulation for alcohol in Tennessee, Department of Revenue, the ABC, and local governments. We are going to discuss. I'm going to zoom out just a little bit. We are going to discuss the three-tier system here in just a minute in our current webinar, because it's very relevant to this topic, especially with wineries, breweries, and distilleries. But just so you see, this webinar includes some important definitions. Then we break into uh, details on brand registration requirements, who pays it, the fees, rates, due dates. So this whole webinar on alcohol taxes is going to really break down the details of each of those registrations and tax types, because we're not going to be talking about that today. The alcoholic beverage tax, the gallonage tax, which we'll be talking about that a good bit today. So just want to show you that this is out there. If you missed this webinar, or even if you were there and want to go back and have a refresher, it's there. And of course, also the liquor by the drink tax is going to further detail that specific tax. Lots going on there. I know that our subject matter expert today, Amanda, that is her area. So throw any questions later on in our chat specific to that topic as well, because we've got an expert on it today. Okay, so back to today's webinar. Like I said, we're going to discuss the three-tier. Just a moment. The three-tier system, this is very common in most states, actually, to have a three-tiered system. It's for selling and distributing alcoholic beverages, wine, high alcohol content beer, and beer. So generally speaking, and of course with some exceptions, and just what we're going to be talking about later, but generally speaking, a licensed retailer may only purchase these items from a licensed wholesaler. A licensed wholesaler can only purchase from a licensed manufacturer or importer. And neither a licensed manufacturer importer nor a licensed wholesaler can sell directly to the consumer, generally speaking. Lots of exceptions for that with wineries, distilleries, and breweries. And that's what we're going to be diving into today. All right, we're going to start with wineries. A winery license, which of course all licenses are obtained through the ABC regarding alcoholic beverages and alcoholic beverages. Local governments come into that too, but again, more info on that in the alcohol taxes webinar. But a winery license allows that license holder to manufacture and bottle wine, as well as engage in a few different methods of distribution. Serving wine without charge as complimentary samples for tasting at the winery, selling wine at retail in sealed containers at the winery, of course, not in bonded areas. Donate wine to nonprofit organizations without charge, exchange wine in bulk to other wineries. We're going to break down some of those later. Basically, we're talking about a manufacturer self-distributing or selling its product without the use of a wholesaler, which goes in direct conflict with that three-tier system rule. That's where we've got an exception here. More about that here on the next slide. Wineries can self-distribute its wine within 100 miles of the winery to licensed on-premise establishments if its total annual wine production is 50,000 gallons or less, and it doesn't have a wholesale distribution contract that includes a county within 100 miles of the licensed winery where that wine was manufactured or bonded. So everything you're seeing here, self-distributed wine directly from the winery, and these situations here that we just talked about on the previous slide, the blue box you see on the bottom here, when a winery self-distributes or otherwise sells its wine without the use of a wholesaler, the winery is going to be responsible for the wine gallonage tax. And that's a tax that's usually paid by the wholesaler. So you've got a situation here where that winery, as a manufacturer, is going to be responsible for that tax in these certain situations where they're going to be self-distributing or selling its wine without the use of a wholesaler. There are lots of other limitations on these methods of distribution. We're just touching on some high points here, and then of course the tax implication. But with regards to the licenses and some other limitations on these methods of distribution that are regulated by the ABC, we're going to refer you over to tn.gov/ABC for more details on that. All right, so farm wine permit holders. A Tennessee farm wine permit holder is authorized to grow produce that is shipped to a winery and manufactured into a wine product and then self-distribute that wine, provided its total annual wine production is 50 gallons or less, and it does not have a wholesale distribution contract that includes a county within 100 miles. We just discussed that. Similarly with wineries, same thing, they're going to be responsible for that gallonage tax. So, satellite facilities. A licensed winery or farm wine permit holder can obtain a satellite permit from the ABC to operate a satellite facility where it does serve samples with or without charge and sells wine for consumption, either on or off the permitted premises. So you see a definition here for satellite facility. It's any facility or location other than the primary business location of a winery or farm wine producer. I have a hard time saying farm wine. I don't know why, so forgive me. Wineries and farm wine permit holders that produce more than 50,000 gallons of wine per year have to supply their satellite facilities with wine obtained from a wholesaler. Wineries and farm wine producers that produce 50,000 gallons or less per year are not required to obtain wine provided at their satellite facilities from a wholesaler. So sales made at, you see the blue box at the bottom here, sales made at satellite locations sold for consumption on premises are subject to the same tax as wine sold for consumption on the premises at the winery or on the premises of the farm wine producer. All right, direct shippers. Certain entities, including manufacturers of wine, are eligible to obtain a direct shipper license that allows the licensee to ship wine by a common carrier directly to Tennessee customers. Without having to obtain the wine from a wholesaler. So again, we've got a kind of break in that typical three-tier system chain here. Winery direct shippers can ship no more than 9 liters of wine to any individual during a calendar month. In addition, they cannot ship more than 27 liters of wine to any individual in any calendar year. However, a winery direct shipper that produces or manufactures less than 270,000 liters of wine per calendar year can ship up to 54 liters of wine to an individual per calendar year. Lots of numbers there, and that's kind of a lot of information to throw into a couple of bullets there. Sorry about that. Winery direct shippers can only ship wine sold under a brand name owned or licensed to that winery, produced by the winery, produced exclusively for the winery under an existing contract, or produced and bottled exclusively for the winery. We are going to discuss the tax implications for this situation for direct shippers on the next slide. So this is the application of wholesale wine gallonage tax to winery direct shippers. We've got an important notice here. If you've got the PDF open, you can click directly on the image of the important notice there on the bottom right, and it'll take you right over to important notice 2104. Because winery direct shippers do not utilize a wholesaler, they are going to be responsible for remitting Tennessee sales tax and that wine gallonage tax. It's generally, as I mentioned, that gallonage tax is generally paid by the wholesaler who imports the beverage into Tennessee or who receives the beverages manufactured in Tennessee for eventual resale, but not in this case. And important to note here, this does not apply to non-Tennessee sales. And I believe, Amanda, that was something when we were discussing this recently that comes up quite a bit, are the non-Tennessee sales. Not doesn't apply there. So blended wine products. Licensed winery in Tennessee can blend wine manufactured by the winery with other wine, fortified wine, distilled wine, or non-alcoholic products. That is, provided that the winery does not add to the wine distilled spirits as defined under federal law on the effective date. Of the law. So I think that was the law that changed fairly recently. More information about that in TCA 57-3-202. The winery license authorizes the holder of the license to place the wine in containers or bottles, and out-of-state residents can apply for and obtain a winery license issued that's issued by the ABC. Wineries and farm wine producers can have their wine distilled, blended, or fortified and distilled with distilled wine spirits made from their wine by manufacturers and can receive from the manufacturers the wine created by the distilling, blending, or fortifying. Um, Wineries and farm wine producers can sell wine to manufacturers, and the wine and a product that results from the blending, distilling, or fortifying of that wine by the manufacturer is the sole property of the manufacturer. Important to note that these transactions are not going to be subject to taxation. All right, so going to talk about liquor by the drink here and sales tax with regards to wineries. So the following things are going to be exempt from liquor by the drink. So liquor by the drink being a tax that's for consumption on premises. So at wineries, samples of wine for tasting with or without charge for consumption on the premises of the licensed winery, farm wine producer, or satellite facility going to be exempt from liquor by the drink. Retail sales in sealed containers for consumption on premises of the licensed winery, farm wine producer, or satellite facility also exempt from liquor by the drink. And this is new, not yet signed by Governor Lee, but House Bill 160 has been passed, and it states that effective July 1, 2025, all retail sale of wine for consumption on premises of a winery, farm wine producer, or satellite facility of a winery or farm wine producer are going to be not subject to liquor by the drink. Again, that's not in effect yet. It's also not signed yet. But we're just putting that out there at this point because so much is going on in our General Assembly the past few weeks with bills being passed. There's another one as well that we'll discuss later a little bit. Very important here. You see in the blue box on the bottom here, sales of samples with or without charge or sales in sealed containers and wine by the glass are all going to be subject to sales tax, sales and use tax. All right, we're going to move on now and talk about distilleries. Very similar in some ways to some of the exceptions and circumstances that also apply to wineries. Um, in addition to authorizing the manufacture of alcoholic beverages other than wine, the manufacturer's license allows a manufacturer to sell products that are manufactured on premise at retail on the premises and serve samples of products that are manufactured on the premises with or without cost. So any product distributed in either of these ways must be obtained from licensed wholesaler. There are additional limitations on these methods of distribution which are again regulated by the ABC, just like the wineries. These limitations include the amount of alcohol that can be sold to individuals per visit, where samples can be provided within the actual facility, the hours of retail sales. Lots more information about that and manufacturer's licenses on the ABC's website, tn.gov/ABC. Talk a little bit about liquor by the drink and sales tax for distilleries here. Exempt from liquor by the drink or distilleries are not required to pay LBD on any alcohol served for consumption on the premises, regardless of whether the alcohol is sold or offered as free samples. Subject to sales tax, distilleries must pay sales tax or use tax on the alcohol that they serve for free as samples to visitors at the distillery. They either have to pay the sales tax to the wholesaler on the purchase of its products served as samples, or if the wholesaler does not collect sales tax, pay use tax on the purchase price of the product that it serves as free samples. One other thing to note here, sales of wine by the glass for consumption on the premises of a licensed, actually, you know what? Scratch that. This new law, I think, changes that, something I have in my notes. Sorry about that. The sales tax base for determining what to charge for sales tax. Sales and use tax law provides that a manufacturer, such as distillery, has to pay tax on the fair market value of property that it manufactures or produces for its own use. The tax base cannot be less than the fair market value of the product that the distillery purchases back from a wholesaler. And if the wholesaler collects sales tax on a sales price that is less than fair market value, they're going to have to pay the difference between the price charged and the fair market value. Retail licensee consumer tastings. So a retail licensee can offer complimentary samples of the alcoholic beverages it sells for tastings to be held on premises. Generally, a distiller can provide these products for retail licensee tastings through a licensed wholesaler. There is a law that authorizes a distiller who provides its product to a retail licensee for consumer tastings to have the wholesaler deliver the product to the retailer using a $0 invoice. Also, the distiller can obtain the product to be used for these tastings from a wholesaler for a $0 invoice and deliver that product to the retailer, the retail licensee's premises. In that case, the distiller has to notify the wholesaler in writing at least 5 business days prior to picking up the product of the date and location that the tasting's going to, where it's going to be and when it's going to be. The distiller can acquire a reasonable amount of product from the wholesaler to be delivered to the retail licensee for the tasting that will occur within 30 days of acquiring that product. If there's any leftover product after the 30-day period, the distiller can email the wholesaler to notify it of approximate amount of leftover product and then possess this overage for another 30 days. And that can go on. That process can continue indefinitely, actually, until all the product is used up or poured out. Again, this is very regulated. The documentation is very important here, needing to make sure that there's just every drop is accounted for, basically. Distiller cannot leave excess or leftover product, either sealed or unsealed, with a retail licensee. It has to be taken by the distiller and held for future use for future consumer tastings, held by the distiller. Um, there is an important notice about this. If you've got the PDF, you can click on that link there. It's important notice 2115. Since we're on the topic, this is not really a special circumstance for distillers, but couldn't really let it go without saying that there is a distiller's alcoholic beverage tax return. Distilleries should use this return. It's on TINTAP ALC 101 to report and pay gallonage tax on their own product that they retain for their own incidental usage. It's limited to no more than 100 cases per month. This rate is $4.40 per gallon or portion of a gallon. Important to note here that distilleries should not report on the distiller's alcoholic beverage tax return product that they serve to customers as free sample. Products served as free samples by distilleries must be purchased from a licensed wholesaler. All right, we've got just a little bit of information about breweries. It's interesting. There's just not as many exceptions to the whole three-tier system, not as many special circumstances for breweries as there are for wineries and distilleries at this point. But tell you what, every year there seems to be more and more laws passed regarding all three of these industries, basically alcoholic beverage and beer manufacturers. So all the information we're giving you now is, of course, just as of April 2025. If you're viewing this later in 2026, 2027, there are probably going to be some more laws passed regarding these topics. And as such, we may update this webinar as it happens because, like I said, every year there's several laws that pass regarding these industries. Specifically about breweries, a taxpayer that sells its products to the public from its tap room owes both sales tax and the beer barrelage tax. Beer that is sold and consumed on premises is not deductible on line 3 of the beer barrelage tax return. Beer that's dispensed to customers as part of a brewery tour where the customer pays for the tour is also subject to that beer barrelage tax. Tastings and coupons, something very common at breweries. Tastings that are not free, even when a coupon for the same amount is issued to the customer, are considered taxable for beer barrelage tax. Also, likewise, sales tax should be collected on sales of these products, including beer or liquor tasting, when a charge is made and the tastings are not provided gratuitously and consumed on premises. If a taxpayer offers a discount such as a buy one, get one free coupon, the barrelage amount sold is still taxable for the beer barrelage tax. A business tax exemption exists for actually all manufacturers, but specific to wineries, distilleries, breweries. If businesses that have a sales tax exemption for industrial machinery or a manufacturing exemption, uh, if they have that manufacturing exemption, they're going to be exempt from business tax as well, unless the dominant sales made from the location are to the general public for consumption on premises. This is especially not unheard of in the brewery world, where the majority of sales at that brewery are for consumption on premises. So again, even if you have that manufacturing exemption, if 50% or more is the test there, if 50% or more sales are made to the general public for consumption on premises, then you still are going to be liable for business tax. Hey,
Hi,
Amanda.
Kate. I just want to point out that this is a big thing that you guys need to be aware of if you are manufacturing. Um, to qualify for that manufacturing exemption, it is for resale. So if you're not purchasing, if you're not going through a wholesaler, then you're distributing it yourself. It is not for resale. And so when it says that it's at the location, if you're selling it at the location, you're not reselling it. So if you're not aware of that, you will lose that manufacturing exemption, the industrial manufacturing exemption.
Yes, thank you,
Yes,
Amanda.
thank you, Amanda.
Let's see, I'm kind of
Let's see, I'm
echoing
kind of
there.
echoing there.
I have opened up the chat for you guys to be able to send questions to this panel. Billy, Amanda, Dan, if y'all want to come back on here and we can see if any questions come through from everyone. And um,
Katie, can you repeat everything you just said? Because,
Watch the
that's a
video.
lot.
Watch the video, Billy. I know this is where when we were having the alcohol taxes webinar, I thought there is no way I can include all this in that webinar because it's just too much. Same with having to break out liquor by the drink as well.
Yeah. I was going to ask Amanda, from your viewpoint, and Amanda, we're getting a little bit of feedback from your deal. So if you'll mute out until I finish this. Um, the the things that you see in audit, can you just comment on some of the more common things that you encounter and maybe some points that maybe would be helpful for our taxpayers out there?
So the biggest thing that you guys should do is keep excellent records, because when we are visiting you and educating you, we will look at every record that you have. And inventory is a big one. You need to keep up with your inventory, and the records need to be maintained for that. And also, know how to use your software to keep up with the inventory and your point of software sales. So that's a big thing. And I know it's hard to learn about the software that you guys are using, because once the vendors sell it to you, they leave you alone. But I can't stress enough, be conscious of your software and what it's doing, and maintain that inventory as well.
Thanks, Amanda. Also, we had a question here too from one of our participants. If the brewery is selling food and merchandise, how does that relate to that 50% benchmark for keeping that manufacturing exemption for business tax? Would you like to comment on that?
Yeah, so the 50% test is going to be on the alcohol sales that you manufacture. That's what you need to have as your dominant business activity. So if you're selling more food, then you'll lose your exemption.
That makes perfect sense to me, and I guess that could happen. It just sort of depends on the operation and what's going on there. But I would think typically high volume manufacturers are probably going to have more gross income than the 50% would allow, and those that engage in other activities besides the manufacturing are probably going to end up okay too. Just looking at some of our other questions here too. Um, let's see. Does the resale exemption only apply to in-state manufacturers, or does it apply to out-of-state suppliers or manufacturers? What do you think about that, Amanda?
So I'm sorry, the exemption, are we speaking about the industrial machinery exemption? Where are you?
I think this is relating to resale exemption as opposed to the industrial machinery.
I'm sorry, which question are you reading?
It's from Jake.
It's from Jake.
Oh, okay. Does the resale only apply to in-state manufacturers, or does it also apply to? Okay, so the resale exemption, if you're selling out of state, then yes, that's a resale. So that's going to qualify for your dominant business activity. Does that answer your question, Jake? I'm sorry.
Should be fine.
I was about to get started on industrial machinery exemption, so I just wanted to make sure I was understanding the question.
Gotcha. Another one here, it says, let's see, when it comes, this is from Leslie, and it says, what is the rule when it comes to selling alcohol at a distillery that the distillery doesn't produce themselves? Can it be sold along with what we manufacture? And are there any restrictions on that? Or would they be allowed to do that?
So yes, I think it does actually have to be what they manufacture to sell that. But I would want to get further information on that for the law. But it has to be what they manufacture to sell there. But I'd want to make 100% sure.
Might be good to check with the ABC on that as well.
I'm like 99%. It has to be what they manufacture. That's the only thing they can sell. But there's that 1%. I just want to double check.
Okay, and Amanda, Janelle asked this question: for a brewery with 2 locations, if they're going to transfer a finished or unfinished beer from location A to B, is that a taxable transaction, or is location B just going to pay the barrelage and the wholesale taxes because they end up being the end user when it's all said and done? And again, that's from Janelle.
Okay, so if you have 2 locations and you want to transfer your finished product to your other location, it's going to be taxable. It's going to be taxable at the primary location.
Okay,
A lot of
thanks.
questions.
Because
Thanks for
the
that.
manufacturer is transferring it to another location. The manufacturer is responsible.
Okay. And we have another question here, Amanda. On LBD, if a restaurant or brewery comps or discounts liquor or wine, do they still have to pay the LBD tax on the full amount? In other words, if it was discounted maybe by $6 from $10 to $4, the LBD tax is on the $10. Is that correct?
Yes, so it doesn't, as long as it's not below cost, you're still going to be collecting the LBD tax on what you sell it for.
Katie, are you seeing anything else we need to touch on here?
There's the questions are long, so it's taking me a minute to look through them. If we don't get to your question today, definitely we're going to be providing you with. Actually, I'll go ahead and go there now so that you can be making note. Any questions that we don't get around to today, they're either kind of nuanced or more specific questions. We do have a couple of areas where you can reach out to us. General questions can always go to revenue.support@tn.gov. Questions specific to wine and alcoholic beverages, liquor.tax@tn.gov. Hold on a second, let me turn on my little pointer here. I'm down here in the bottom left corner. Regarding brand registration, there's also, which that definitely affects a lot of manufacturers. Brand dot registration at tn.gov. We have a general tax line 615-253-0600. We have a whole unit called the miscellaneous tax unit that deals with all of the alcohol related taxes, also tobacco. That's 615-253-0680. We won't be able to get to every question in here. Like I said, a lot of them are pretty nuanced and require just, I think Amanda would tell you that, especially any auditor, anyone in our department, so many questions require another kind of 20 questions on our end. For more information, it's not as easy as just a question and answer. You've got to kind of dive deeper, so to speak.
Right. And Katie, you know, that phone number 253-0680, area code 615, is a great thing to do, because the people that work in that area, um, definitely, that's what they do all day long, is these kind of taxes. So if you want to know more about that, that'd be a great place to talk. And Amanda, I think you wanted to talk a little bit more about Jackie's question. Go ahead.
Okay, so Jackie, when I say it cannot be below cost, that is your cost of the product that you're selling. You always have to collect tax on at least your cost. You can't give it away. And you're speaking about liquor by the drink, so it'd be 15% on whatever you sell it for, as long as it's not below your cost what you purchased it for. Does that help explain what you're asking?
I would think that it
I would
would.
think that it would.
Okay.
We have a question from Debbie. What about memberships to your program? Do you charge sales tax on that? I believe any kind of memberships when it comes to this kind of thing, would that be considered an amusement, Billy, do you think?
I would think you're talking about from a sales tax
Yeah.
perspective, Katie.
Yes.
It would seem like it would be. I'd have to look into that a little bit closer on the
Yeah.
amusement tax part of sales tax, but there's an element of that that would probably be considered. I know that's typically stuff that is subject to sales tax, various tours, things of that nature have an entertainment value to them, so they're generally subject to sales tax. But I think we'd have to know more about the on a case by case
Debbie
basis.
says it's for an awards program. This is, I learn something new every day. You can get awards for going to breweries and wineries. That's something to be proud of, right?
Oh, how about that? Okay, that
That's
sounds
pretty
like a
cool.
goal,
I
maybe. I
guess
don't know.
maybe I'm not quite sure what that entails, but
Yeah, we
um,
probably would want to dig a little deeper on that. So if you'd like to call
yeah.
us or send an email about that,
Hmm.
we'd probably need to know a little bit more about that situation and what the criteria is, and is there any compensation? Is
Hmm.
there, what's involved? I guess the
Yeah,
details.
Debbie, send us to that revenue.support some more information about that, or the liquor.tax at tn.gov.
Dan put a link out there to our alcohol tax manual in the chat as well, and that's a handy dandy little guide, like Dan says there too. I agree with that. Our department has lots of different tax manuals now, which are basically um, covering so many of our different taxes. There's almost 30 different kinds of tax in Tennessee. And we are heavily involved in a lot of them. Some of them have a lot more regulations than other taxes. For instance, like Katie and Amanda have been talking about all day, um, alcohol tax is heavily regulated. Okay, so we have quite a bit of detail in these manuals that can really help you out. Dan, you mentioned in here in chat that distilleries aren't required to pay liquor by the drink tax on alcohol served by consumption. And we do have a notice that was put out in 2018 that talks about that as well. And again, that would also be in the alcohol tax guide as well. Okay. All right. Um, Katie or Amanda, what else would you like to discuss?
Like a lot of the questions are really long and taking some time to read through. Um, you're on mute, Amanda. I think you might be talking.
Yeah, it's really in-depth questions on here. They really are long. I'm reading through them.
Like I said, if we don't get to your question, just send us an email. It's kind of a lot with a lot of steps and a lot of details within several of these questions that I don't think would be able to get to today. Amanda, do you see anything else in here that you want to address before we wrap things up for the day?
I've got a good question from my good friend James Davis. He says, would sales tax and liquor by the drink be applied for a once a year event ticket sales that would include 2 free drinks? Is there such thing as free drinks when it comes to liquor by the drink?
I'm going to unmute you, Amanda. Hold on just a second. Having audio issues. There we go. You're unmuted now.
No such thing as a free drink. It cannot be below cost. No such thing. There are some circumstances for sales tax, but not liquor by the drink tax.
I'm going to go ahead and address some of the stuff on this slide. On the next slide, y'all can be looking through to see if there are any other questions that we want to discuss while we're still together today. If you don't already follow us, y'all, please do. This is the way we distribute lots of good information about events that we're having, important notices, especially this time of year with all the law changes. If you don't follow us, you may not know that there's been an important legislative change that affects whatever industry you're in, whether you're a CPA or whether we've got people here with us today or viewing this that are in the specific alcohol industry. Please follow us so you can stay abreast of all the information. We also have some upcoming webinars we want to tell you about next month in May, last Tuesday of the month, 5/27. We're going to be discussing professional privilege tax. On the June webinar, last Tuesday of the month on 6/24, we're going to be talking about closing your business. And all the different implications of that with regards to the different tax types. Don't have it listed on here, but every July, last Tuesday of the month, we have our legislative updates webinar. It's one of my favorites. Someone from our legal division, usually Jeff Foster, helps us and joins in on that one to let us know all the stuff that passed in the General Assembly that spring. So be on the lookout for that one. We also have a new business workshop coming up in a few months. Our next one is on July 9th. You register for all of these events by going to our taxpayer education and outreach button on our main tn.gov/revenue page and either clicking on tax webinars to register for the webinar, or you can click on new business workshop if you want to register for that. The new business workshop takes place quarterly and it's a pretty long event. It's about a 3-hour long webinar. It's great if you're a new business to give you a brief overview of all the main tax types and navigating our website, including 10-tap help. So spread the word about that for us, if you will. I'm going to go back to this slide while we're wrapping things up here. Was there anything else y'all wanted to cover from the chat or?
I don't think so. The questions that I was looking at too were sort of complex, unless Amanda has something that she wanted to talk about.
Someone just asked the question just to make sure of the breweries if the high gravity beer that they sell is subject to liquor by the drink tax. And yes, breweries that sell high gravity beer is subject to liquor by the drink tax. However, with the gravity of the beer alcohol increased, we don't really see a lot of high gravity beer sales. But yes, it would be subject to liquor by the drink tax.
Okay, thank you, Amanda. Yeah, and some of the other questions, like I say, are a little complex and maybe not suitable for a large audience. So if you do want to send those in to us, that'd be great. Or just call our miscellaneous unit at 615-253-0680. We are most happy to help you and get through some of your issues that you might have. So we're glad to have you. So again, apologies for any of the audio issues. We are trying our best to uh, deal with some of these different nuances of audio problems that we did have today, but we'll get through that and address that hopefully for the next one. And we apologize. But anyway, on behalf of everybody that's been on the call today, we appreciate your attention and look forward to you to participate with us here too. Katie has put the slide up about the survey for CPE credit. And as she's saying here, answer yes to question 4 and put the name on there that you want on your certificate. So be specific because Katie, you don't want her on your bad side. She's a nice person. But Katie, do you have anything that you want to say as we wrap up?
Nope, just want to thank you all for being here, and special thanks to Amanda for helping us navigate through this pretty complex topic.
Thanks, everybody.
Thank you. Thank you.
Have a good one. We'll see you next month.